A difficulty for Federal Reserve policymakers is that the world's largest economy likely grew at the fastest pace in almost 2 years during the third quarter on the strength of a sturdy U.S. consumer. While economists polled by Bloomberg predict that GDP grew at a 4.3% annualized pace from July through September. The expansion shows that the US is still the world's leading economic power, even as Europe's economy stagnates and Asia faces challenges from a faltering China. While consumer spending, the lifeblood of the American economy, is expected to grow by 4% this year. After nearly 2 years of interest rate rises, resilient demand is putting the Fed's policy-making prowess to the test. Even while inflation has dropped majorly, the price increases are still roughly twice as fast as the target. The GDP data on Thursday wouldn't be enough to convince the Fed to raise rates in November. But strong fourth quarter expenditure would enhance the likelihood of further tightening around the new year. Fed Chair Jerome Powell at the Economic Club of New York on Thursday said, and I'm quoting him here, additional evidence of persistently above-trend growth or that tightens in the labor market is no longer easing could put further progress on inflation at risk and could also warrant further tightening of monetary policy. Economists in a Bloomberg survey forecast a 3.7% increase in the core personal consumption expenditures price index, which is one of the Fed's preferred measures because it rather excludes volatile food and energy costs. That would be the smallest annual gain since May 2021 and consistent with modest progress on inflation. On Friday, we'll get a sense of the fourth quarter momentum in household demand and inflation based on September income and expenditure data as well.